Get Rich Slow with John Wolf. Hey, today we're going to talk about what big lenders don't want you to know, part one, and that is rates and points. And please, if you like this, subscribe, share, hit that like button. And I'm just going to take a deep dive into what's actually the simpler of the two pieces. And I'm sorry, I can't talk about the two pieces together. And I definitely am not allowed to talk about the two pieces on one same deal together. I'm just not allowed to do it. But anyways, let me show you what trickery and witchcraft I think is going on to help confuse people. And the way I'm going to do that is I'm going to show you raw pricing sheets for conventional FHA and VA. And I do want you to understand these are not your quotes. This isn't what you're going to get. In fact, this isn't exactly really what anybody's going to get because there are actual pricing increaser modifiers and discount modifiers that have to be applied on top of this. So this is just sort of the raw pricing. And the raw pricing from the three different types of loans is also very different. But okay, here is the raw pricing of a conventional when I pulled it from Close of Business Friday. Anyways, so if you see here, I have highlighted 2.75. 2.75 is what a lot of the new loans that I'm closing for conventionals, that's what I'm quoting them. And just so you have an idea, in the last month, most of the conventional loans I've been doing have been between 3% and 2.75. I did one that was at 2.5, and I've done a few up at 3.25, but those ones had, again, significant price increase modifiers. But here I just want to talk to you about the raw pricing itself. And so let me tell you what all of these columns mean. Now, this is a 30-year fixed loan, and I made the loan amount almost exactly $500,000. And the first one is what the interest rate is. The second column is what percentage in points you have to pay or receive back to get that rate. Red are the ones you have to pay for, green are the ones that you receive money back. The next column is just the dollar amount based on that $500,000 loan. And the next one after that is what the monthly payment, and this is just principal and interest, is for those two. And then this last one is what the mortgage insurance would be if you put 5% down, again, for a $500,000 loan. So that means the purchase price was more than $500,000, just to be clear. Okay, and just some things I want to point out to you is the pricing and how it's really jumpy. So if you see right here in the raw pricing, there's a tiny little baby credit for 2.85, and then there is, you know, an increase in cost as the interest rate go down, but going from 2.65 to 2.5, there's actually a big increase in price. I mean, that's what is that? Almost $2,600 cost for this loan amount, anyways, and you would be saving, what is that? 25 bucks a month. Is 25 bucks a month worth paying that difference? I don't know, that's up to you. And we might talk about that in the future, but that's not the purpose of this video. And then I just want to kind of drag the attention in the other directions where if you look all the way at 3.25, I would have to pay you back a massive credit if this was your loan pricing, which again, it's not. And there's some like weird points. Like you notice right here, the pricing for 2.99 is actually, you get a bigger credit than 3. It's the note rate that the investors want is what's really happening there. Okay, now I want to show you same loan amount, different loan type. So we're going to be doing a 30-year FHA, and the pricing thing is kind of all messed up for this chart, but I want to show it to you. Okay, so here we go. So the interest rate I would be recommending for most clients right now in FHA, and I have a loan that just closed at 2.25, and I have several going and closing at the 2.75 right now. But why those two rates? Well, let's take a look at this pricing sheet. Now, this pricing sheet is weird, but this is the raw pricing. And again, most of my clients doing 2.75 actually took a large credit. I know this shows a cost. And the people who did 2.25 did pay a cost. Now, the cost isn't necessarily as big as the difference between those two numbers. And that's complicated. I'm sorry, I can't really explain that easily. But one thing I do want you to see, and this is why you would pick a specific rate is that the cost differences between different rates above 2.75 are actually real. So it's literally more expensive for you as a client to get 2.8 than it is 2.75. And that kind of continues all the way down this trend line with a few tiny exceptions. And that's based on the bond note rate and what the bond's like. But again, let me just re-describe these columns for you. So we got interest rate, points, how that point translates into dollar amount for the $500,000 loan, what the monthly payment would be, and FHA doesn't auto-populate the mortgage insurance, but that's what the FHA mortgage insurance would be. The prepaid rolled into the loan mortgage insurance is also rolled into this monthly payment, which is why it isn't the same as the last chart. Okay, now let's look at, I just want you to remember that I've actually been giving people credits for this amount. Every client I've had recently. So there are discounts that aren't applied. This is the raw rate sheet. Now just remember that 3.8 because I'm going to show you the VA rate sheet next. Okay, so the VA rate sheet, it's showing 0.675. Now, VA and FHA pricing is very similar. They're not the same. VA is actually cheaper than FHA. So there is a VA price modifier that decreases this number more than the FHA. I just want you to know that. Even though here it looks more, and again, because this is the raw pricing sheet. But VA and FHA are in the same game right now where I can either give most clients 2.75 and a large credit, or they can do 2.5 and they have to pay money into the loan. I've had clients do both. I think in the last month, it's been about a 50-50 split of the clients choosing either they want credit now or they want to pay in to get that literally 2.25% interest. Crazy. And I don't know if that's going to last or not. I get that question a lot. I don't think it'll change substantially until December, if it does change substantially then. I just don't think it'll change substantially before then. All right, now I just want to show you a few different sheets, and these are actually really old, but I kind of want to show you places where there's just a really not flat sheet. And the last two, the VA and the FHA, are examples of that, but they're weird examples, and it's because of what's going on with the Federal Reserve supporting certain bond notes. But here's what a real one before that happened looked like, and it was where, and I think this actually was a FHA if I remember right, but 3.75 is incentivized. Everything all the way up here is more expensive for the consumer. And you see these patches of green in the middle, and that happens a lot under natural market conditions, and that's because this interest rate right here is being supported by a 3.5% bond, and this one's getting supported by the same 3.5% bond, but no one wants to play in the middle range, whereas over here it's being supported by the 4% bond. Same thing is going on with the VA and the FHA right now, except we're talking about the 2.5 and the 2% bond. And then here's just another one I wanted to show people when it would actually make sense to do a cost. And this is actually a different loan type, but it has almost the same difference if you notice the last one. But like if this was the sheet I was given, I would take that 3.7 because you notice that's a really small cost, and the monthly payment from the next one that has a cost about that size, there's a big split. That's not really going on right now, but that's, I wanted to give you an example. And I do want to show you, and I'm actually going to navigate there live, doing it live because I want to show you I'm not doing any tricks. If you Google Quicken Rates, here's the sheet I want you to use to try to compare side by side between different lenders. And not every lender honestly has honest rates online, or at least they don't seem honest to me, but Quicken does. And the main reason, they're big enough that they get regulated a lot, but it doesn't mean they're not playing games. So here is the 2.875 30-year fixed. That APR is a lot higher. I wonder what's going on there. So let's scroll down to the fine print. Fine print's very important. So if you want that rate, it has to be a $200,000 loan where you actually put more than 25% down. Again, what I was showing was 5%. And the APR is so much bigger because they want you to pay 2 points up front. So that means in just straight up fees, in addition to their normal origination for that $200,000 loan, they want you to pay $4 grand up front don't do it. Don't do it. You saw what my sheet looked like, and again, that's not the complete quote, but if you were looking at one of these and then you called me, you'd be really, really, really happy at the change in your closing costs. And on a $500,000 loan, that would be a 10 grand gap in 2 points. So it's real money. That's real money straight out of your pocket. And then I want to show you one of the local credit unions I talk about a lot. And I'm just going to do it live, and you can see the timestamp of when I'm doing this. And let's just get to their pricing sheet. Now, one of the things that's not on the screen, but their origination is a lot higher than mine, but they're showing that same 2.75 for 1.6 or 0.6 points. So they're smoking Quicken. But I will have you know, I've quoted against Quicken twice in the last month, and I can't tell you if I was at the same rate, but look at my video, the next one, the video about fees, and you'll see how the fees are different. And let's put it this way, all 3 of the quotes I did directly against Advantage went with me, and the difference was a lot, and they were very happy. Again, I'm a loan officer in Oregon and Washington, so if you like this, please subscribe, share, smash that like button so the algorithm knows I'm a really good guy. Have an awesome day. Take care. Bye.